All right, everyone, welcome back for the episode of Carnivore Trades. Today is Wednesday, April 5th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, market's finishing lower again today. So 2 days in a row down here. Spider's down just 25 basis points. Q's down 1%, so definitely on the weaker side. And as I said yesterday, this looks like a pullback, right? It doesn't look like we're seeing any sort of major downside. We do have this big wedge pattern here on the daily, which goes all the way back to August and the October lows. So a pretty good range there, and we're starting to tighten. And you can see here, obviously everybody knows who's a swing trader is getting frustrated here with this market because we're just getting into this very, we've been in a range for quite a while, but we're building compression here. So what that tells you is that whichever way this breaks, it's probably going to be pretty powerful. Now, I'm still in the camp that we can push up here a little bit higher. I'm not sure how much higher, but the market's kind of showing, that this is just kind of a pullback here, right? So we had a big move up. We had the ISM number and ADP number this morning. Both of them came in cold. And to me, the market kind of sniffed that out, and we're seeing a little bit of a kind of micro sell the news, right? So it looks like the market priced that in. And remember, still bad news is good news for now. That may be changing soon. I know yesterday everybody, like my timeline, my Twitter timeline, and YouTube as well, everybody jumped on this and was like, that's it, crash confirmed, we're going down. And, the market's concerned about recession and, bad news is bad news again. I don't think we're there yet. I think bad news is still good news. We're overbought. That's really all it is. And we're seeing the market come off. And, the bears were loud this morning too on my timeline. We were down here on the spiders. And to be fair, the Qs got hit pretty hard. But you can see we finished down just 1/4%. We're well off the lows. If you look at a chart like Apple, beautiful trend line hit, by the way, too. Take a look at the all-time high trend line, extended. If you remember back in February, I talked about this possibly going up there. At least I remember saying that to members, that we could get up to this trend line, and there we are. But nice pullback there. But take a look off the lows here. Was down, I think, 2.25 at one point today, 2.5 at the lows below 162 and finished at 163.76. So again, this behavior does look like a pullback. Now, could this change? It absolutely can. Remember 2 months ago, I should say, in February, everybody thought this was a bull flag, and that wasn't that, obviously. Could that be the case? It absolutely can. Here's your yellow flag for bears, as I mentioned yesterday. Semiconductors down 1.75%. They were down over 2% at one point today. They did come off of the 20 moving average. Take a look at this interesting. So we've been talking about this big wedge pattern, right? You have a smaller wedge inside of that now. So you've got two rising wedges, right? One bigger on the daily. It's actually kind of like a weekly pattern. And then one here on the daily. So we'll see what that does here tomorrow. They did defend the 20 moving average, but that did kind of violate that shorter term trend line. If we pull up like a intraday, there's a 4-hour. So we did close below that. We'll see what it does tomorrow. I'm inclined to think that tomorrow will be a little bit more of a quieter day. It's, I know a lot personally. I know traders that are taking off this week. It is spring break, Easter, obviously holiday. I think the volume will start to return a little bit maybe next week. But either way, interesting pattern here to watch. So the semis are weak, and that is noteworthy. That's a yellow flag. Another yellow flag, which we talked about yesterday, is the Dow Transports. This is not good. So when you have a big up move like this and you get above resistance, you want to see, it doesn't mean you have to follow through and blast off higher the next day, but you want to see flagging. You want to see something, a back test and then a bid. We did do that on Monday, and then we got a nice little inside candle. Everything looks fine. Yesterday we broke down. Today further downside, closing below that 200 moving average, not by much, but closing back below it. So not a good look here to close the week back above that and then essentially fade the whole move. Transports are getting hit. Take a look at XPO Logistics here. That just made a new low, since November. Trucking names, Ryder System still holding up okay, but that's a bear flag there on the daily. What's the other one? JB Hunt So these are not great chart patterns here, losing all those moving averages. So trucking names are getting hit. The jets, not really participating in the bounce all that much, and it has, but it's faded pretty good. So transports are a bit of a red flag. IWM also very problematic here, and these are leading indicators. If you guys have been following me for a while, I follow these very closely. The Russell, the semis, and the transports. If they're all underperforming, that's not a good sign moving forward. That doesn't mean the market's going to crash tomorrow. Again, we're in a holiday week. The volume is putrid, 64 million shares today. Will probably be even lighter tomorrow. And when the volume is light, you want to give the market an upside bias. But these are things that it's going to get addressed down the road. So we'll watch this. But for right now, I think this is just a pullback, and we'll give the market kind of the benefit of the doubt. But it is interesting, and I talked to you guys about this last couple of weeks. I said tech's probably going to start to underperform here. It's had a nice outperformance lately, but now we're back to the Dow outperforming. So the market's basically back in kind of a recession trade. The Dow is green today. That's not bullish. So you don't want to see blue chip stocks leading the charge here. But in any case, I still think we're a little bit a ways away from a bigger sell. And the market can climb the wall of worry a little bit longer. If we take a look at bonds, they really took off today. The 2-year actually came way off the highs, but took off earlier on that ISM and ADP number. So there's the 30-year making a new high. TLT, not quite a new high here, but still getting a nice bid. But the 30-year futures, ZB here did make a new high. And the market's kind of ignoring that. So at least for now. So we're climbing the wall of worry that will come back to haunt us in the future. By the way, let's go over to the yield curves. We haven't talked about that in a while. So everybody's all talking about how, the 2s and 10s, they're normalizing. Everything's fine. Well, the 2s and 10s, first of all, they're not normalized yet. They're still heavily inverted by 0.5%. But the 3-month and 10-year just hit a new low. And I think that's an all-time low. It might be back in the 70s. It was lower, but we're back below where we were in 2000, 2007. This is the 3-month 10-year. This is not good. So again, these things will come back to haunt us down the road, but for right now, the market's holding up. That's my big takeaway. Anyways, let's get over here to, we briefly talked about, let's look at the Russell again. So again, looking like the transport's back below that 20 moving average, back tested it intraday, and then, sold off. So not a good look there. For the Russell, the Dow is still holding up. If this consolidates, this can get up to 340. This is obviously holding up the best out of the major four major indices. And again, it's a blue chip. It's price cap weighted. So that's not bullish when that holds up the best. For the spiders, they're hanging in there okay. Again, if you get sideways consolidation, we can get one more little move up. I don't think it lasts all that long though. And then the triple Qs here, again, maybe they can go up and fill this gap. Maybe even a slight pierce of that, maybe 325. But for right now, again, they're just hanging in there. So we'll leave them at that, let the pattern play out a little bit longer. We talked about the semis on the near term. You want to look at this smaller rising wedge. If you break through that, you're going down to this trend line. Maybe you could hold the 50 moving average in the short term. Again, it's been holding up well. The market's hanging in there. But that's kind of the levels we're watching. I don't see a lot of upside there. As I've said multiple times over the last couple of weeks, IGV hanging in there, still holding that green bar. So this is actually a strong sector right now. You have a little, I would call it a test candle. So you still have an inside bar on the daily. We had an outside move. We closed back inside of it. So it's holding up okay. If this consolidates, we know we can go to 310 there. So that's hanging in there all right. We mentioned the transports already. Not a good look there. Really, any way you look at it. Those trucking names are taking a hit right now, and that's going to be problematic. Down the road, bonds, we already touched on. 10-year did make a new low here, new low going back to September. Again, I don't see a ton of downside in it right now. Maybe 3%, maybe a pierce of 3%. The 30-year, about 3.2. That's about all we're looking at for the downside there on those yields. Over to, let's go to housing XHP again, a weak chart. So just like the transports, when you get that big outside move, you get above resistance like that, you want to see flagging or a follow through, and this reversed that yesterday right back in this range, and then follow through to the downside today as opposed to upside. So again, is housing finally starting to respect the deflationary threat that's going on? It looks like it. ITB, again, still holding this green bar, but back below what is it? Back below this 69 handle. So again, losing those areas, not a good look there. VNQ, it's hanging up, it's hanging in there okay, still inside of this green bar, but I mean, trend is down, it's a weak name. If it consolidates, it can get to 85. We'll give it that upside bias if the market holds up. XLF, so financials, coming off the lows here. XLF was actually on the stronger side today compared to everything else, came off the lows pretty nicely. In fact, the low of the day was right, on the first open, pretty much. So financials getting a little bit of a bounce here. The KRE, they're trying to defend that 42 handle. Again, we've hit that multiple times now. We got hit on the first test, and then 1-2, we had a gap down, nice reversal at lower highs here. This is not a good look. I don't think it's ready to break down yet. I mean, so everybody's saying, everybody's saying like, oh, we got a descending triangle look here, and you do, but you got to look what you're going into. Okay, you're oversold, and look at this area here. So it took you from March to October of 2020 to break through this area. Generally, you're not going to just bust through that after 3 weeks of consolidation, especially when you're already ridiculously oversold. I mean, we're down 30% here on the KRE, in a couple of weeks, right? It's not just going to bust through that. I mean, it could, if the Fed just decides they're not going to save the banks, which they're not going to not do that, then you would go through that. But I don't think, I just don't see that downside right now. In the future, yes, but you got to get these moving averages catch up first. But financials hanging in there. For now, they're trying to hold on. The KBE, a little bit better shape there, large bank ETF there. Anyways, broker dealers, still a bear flag. This definitely has more downside, right? Big rising wedge break. More consolidation can get you through that. We got 4 weeks of consolidation in this area, and you've got 4 right here. So this can go lower. I'd say another week or 2 would probably do it. Flipping over to energy here, so let's shift gears. Crude hanging in there, nothing much to say about it. I don't see a ton of upside here in the near term. Could it get up and to test this 82.72 area again? Maybe the 200 moving average? Yes. There's also another level around 85 above that. So that's about your upside right now, but it's holding the gains. We'll respect it. I'm inclined to think it's going to fill this gap sooner rather than later. It might just need to make one more kind of up move here to push out any more shorts to do that, but we'll see what we get. It's holding up. We'll leave it at that. XLE having a nice bid up 1.5%. And again, XLE, we talked about this Monday. If this wasn't up 1.5, the market would have been down a lot more, considering how down like Apple and Microsoft. Taking a look, Meta was down pretty. Amazon took a pretty good hit here. So XLE really helping the market here. Definitely an interesting dynamic going on as we have production cuts out of OPEC, but then you have a recession, obviously on the horizon. So it'll be interesting to see how these dynamics work out here moving forward. XOP also getting a bid, but that trend line held there, so that's still under a little bit of pressure, but in better technical shape than it was. OYH lower today, but still holding that 280 level. I wouldn't touch this right now. It's just all over the map. Nat gas getting off the canvas a little bit here today. Made a new high on the week. I still like this weekly chart setup here, so we'll see if that can get going next week here. But nothing really too new to add. It's just basically holding off the lows there for now. Dollar index, nice rally here for the dollar. So that got defended, and everybody's talking about the demise of the dollar right now. We're years away from that. Okay, like there's no other viable solution, and because everybody has a recency bias. It's just how markets work. Nobody wants to buy the dollar now, but they all wanted it up here, right? Nobody wants it now, but if you look on a monthly, all you're doing is back testing or back checking a level that took you 8 years to break out of, right? It took you 8 years to break through that. So this is where the institutional money is sitting. So this is where, I'm not saying it's a buy right here. I still think it has to go pierce this level here, maybe down to 100 even, but this is, everybody's talking about the dollar. It's over with. If the dollar was over with, we wouldn't be. This is what it would look like. Okay, if there was an actual exodus, it would look like that. There's no, when you see currencies sell, they sell, and they don't chop around. They just go down. So dollar is fine for now. Gold here is holding up really well. It's behaving well. Basically flat on the day. Nothing wrong with the little doji pattern. Can't really say anything bad about it. Basically, almost touched 2050 today. So where did we get to? 2049 spot 2. So that's holding up as well. Again, I just don't favor chasing it right now, as you guys are aware. Silver also coming back in a little bit. I think this is overdone at this level here as well, but it's holding up. We got to respect it for the time being. Platinum, pretty good reversal there, but it didn't completely lose the move. We'll see what it does tomorrow. Let's put this in here. Well, I guess you got to, I would say below 1029.50. Or excuse me, 991, not 1029. Sorry. Let me draw this in exactly. There, so 991, that's your green bar right there. You want to stay above that. It's holding up okay for now. This could still get to 1040 though, but pretty good reversal there. Remember, platinum is a thin market, so it can get moved around pretty quickly. Copper here, coming off the lows, but you failed that inside bar yesterday, and you've got lower highs there on the daily, so I do not like that. And actually, weekly lower highs as well. Again, I think it's cooked up here at this level. Also lost that green bar low on the weekly time frame a few weeks ago, so that is a big negative. And you guys know I'm looking for 375 on the daily as big support. All right, back over here to TradingView. Let's take a look at Bitcoin quick, and then we'll wrap up. Bitcoin hanging in there. Again, still has a nice inside bar pattern, very tight range here. This is good. It's holding up well. It probably makes its move, I would say, if it's gonna, in the next week or two. And that's where I think that could potentially coincide. We talked about the 30,000 level, possible pierce of that. That would potentially, to me, coincide with like some type of a higher low here in the spiders, and then one more push up. And that's really all I see for the markets at the time being. But Bitcoin's hanging in there okay, and we'll respect it for now. Anyways, guys, that's about it here. I'm going to wrap up here. Again, to me, it looks like we're just kind of having a little bit of pullback. Nice trend line hit, but take a look at this wedge. We're getting tight, right? So it's tightening up. We're building compression here. And it's definitely getting interesting. Tightening range. It's been a tumultuous last 6 months. We've been stuck in this range for quite a while, but I think we're getting ready for a big break soon. We're just not quite there yet. Anyways, guys, we'll wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.